Hello, traders. It's Thursday, June 16th. We're about 2.5 hours into trading. Let's take a look at my last pick, letter U. This is where the video was posted before the open. Yes, there was an opportunity. Stock went from about 35 down to 33.50. There were some opportunities in there to make money on the short side. You can see that the stock did bounce a little bit, but today it's right back at it. There is some definite weakness in this one. Decent pick, not my best one, but very difficult because we also had a market that dropped about 90 S&P points on the open. So very, very difficult to short when you've got that kind of drop. Let's take a look at the action today. I'm going to show you a couple of patterns that are setting up. First of all, daily chart. Get your long-term market bearings, market first, market first. There is not one asset manager that is going to stick their head into this news. Look at the selling pressure that we've seen the last week. S&P down 10% in that time. Huge gaps. You can look back on a 52-day chart, 52-week chart, a 1-year chart, and you will not see gaps like that. That tells you that there is an adjustment. And that adjustment was everybody was at a 50 basis point rate hike here. Now they're in a 75 basis point rate hike. They got it yesterday. So that sentiment changed very, very quickly and the market adjusted. Plus, the Fed said, hey, we might do 75 basis points in July. Now, the Fed takes a break August and halfway through September. The market is not going to like being on autopilot in August. Like I said, asset managers are not going to stick their head into this news unless we get a big drop, hit an air pocket with a capitulation low. Then they might come in and nibble. But otherwise, we should expect this market to leak lower. You do not want to be buying dips. I'm going to show you a trap that's set up today. Here you've got a drift lower. You've got a downward sloping trend line. And here we break out through that downward sloping trend line. Hello, this is it. Long green candle. I got to buy. We're going to go higher. No. Now that dip buyer here is really starting to have some buyer's remorse. Now they're, oh my God, oh my God, not again. So they start selling their position, and this lures in those bullish speculators, and it causes some shorts to cover. But then this drop gets them out of the position, and that's what fuels the next leg lower. If you look visually, you will see a downward sloping channel that has formed. Eventually today, I believe you're going to see long red candle, long red candle, long red candle through the lower end of that trading channel. And we can draw it in for you just so that you can see it a little bit better. But the lower end of this channel is going to be breached, and then you'll get a bullish hammer that will mark the low of the day, and there's a chance for a little bit of a bounce. We have quadruple witching today, so triple witching actually. So we can expect some market volatility later in the day, but you've got to favor the short side. You have to play these drops, and that's where you want to take profit on your shorts, and then you wait for the bounces to stall out, and this is where you reload. That's how you play it. You don't even worry about the long side right now. This is not two-sided trading action. This is very, very strong downward momentum on a longer term basis. So look for the market to continue lower. I'm going to see if I can find a nice stock. Now, what I don't want is I don't want stocks that are absolutely destroyed. I'd like to see something that's still got some meat on the bone and still has a chance to go lower. So I'm going into my heavy selling list, and VLO is one such stock. You can see on a 15-minute chart continuing to sell off. Downward sloping channel here as well, probably going to culminate with some type of selling climax. By the way, everything that you see in my videos is a day trade. Day trade, day trade. Too volatile for swing trading. So you can have huge, violent snapback rallies. All the Fed has to do is come out and say, hey, everybody, we think that inflation is abating. Forget that they've gotten that wrong for the last year. All they have to do is make a statement like that, and you're going to get about a 300-point S&P 500 rally, and you're going to have those shorts rammed down your throat. So you do not want to be taking a lot of swing positions right now. You want to be favoring the short side intraday, day trading. So what I'm going to show you is a day trade. I think it'll perform well for the next week or so because we're seeing a rotation out of energy. And you can see VLO is a refiner. Beautiful upward sloping trend line. This is one that we played here, 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 here. VLO has been a long of ours. And now you're starting to see those gains given back. It's testing the 50-day moving average. So I like VLO on the short side. And I also like MPC on the short side. So this would be your caveat for the trade. We need to see MPC close below this upward sloping trend line, which comes into play right around 93.50. That also puts it below the 50-day moving average, and that is where you should take a short position provided that the stock still has relative weakness. This is a 5-minute chart, and you can see how the stock does have these little bounces. So if you're looking to short MPC, you can see orange line below zero, very, very weak. You want to be taking profits here on these long red candles because you know it's going to bounce. And then it bounces. You wait for that bounce to stall out. Okay, okay, okay. Meanwhile, you're watching the market. All right, market's still weak. All right, I think I can reload my short. Okay, here we go. Long red candles. Now we're compressing. Tiny bodied candles. Okay, let's take some gains in here. Oh, look, we're getting a little bit of a market bounce as well. So this would be a good time to take my gains on my short, let this thing release, and then wait for the next wave of market selling and wait for that bounce to stall out. Reload here, take gains down here. MPC, I like this short. That is going to be my pick of the day. I'm pretty confident that when I do my next video, it's going to be lower. And you can see here how that trend line is significant. So is the 50-day moving average. You can see the selling pressure. Right now, the fear is that the Fed's actions are going to push us into a recession. Well, that will not bode well for energy stocks. That's why basic material stocks and energy stocks have been selling off. The sentiment was that they're going to make a ton of money in this inflationary environment. Now the fear is that they're going to ramp up production and the demand for those basic materials is going to dry up and they're going to be sitting on a ton of inventory. Prices are going to drop, and that's what that is reflecting. But you can see there's lots of room for it to go down to the 100-day moving average. MPC, that is your pick of the day. I like it on the short side for day trading. Evaluate it each day. Make sure that it's maintaining its weakness relative to the S&P 500. I think you're going to have some really nice gains trading this stock. Expect the market to continue lower. Watch for that downward sloping trend line to be violated today on the downside, and then look for that long red candle that looks super nasty to reverse on a 5-minute basis, form a bullish hammer, and then you know that you're going to see a little bit of a release. Now, final point for me, normally, yeah, sure, I would play that bounce. That's a good bounce. For most of you, it simply means take your remaining gains on your shorts, call it a day. And the reason I say that is because the market momentum to the downside is so strong that you do not want to get cute trying to play bounces. You want to focus on shorting, taking gains on those big drops, waiting for the bounce to stall out, and reloading. That's the mode you should be in right now. Good luck with your trading. I hope this video helped you out. Please leave your comments. We'll see you next week.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.